Welcome to Trader Chat on the 20th of June 2012. This is our 29th Trader Chat, and as always I need to run through our legally obliged disclaimers before we start. Our first disclaimer reminds us that all trading involves risk. Please be aware of and accept this risk before trading, and never trade with money that you cannot afford to lose. You should also be aware that past performance of any trading methodology is no guarantee of future results, and no representation is being made in this webinar that any account will achieve profits or losses similar to those discussed. And finally, all results should be considered to be hypothetical unless otherwise specified. Hypothetical performance results have many inherent limitations and, unlike an actual performance record, do not represent actual trading. A few pointers about using NetViewer. I see a few new names there, which is great. So you should know that the best way to ask questions is to type a message into the chat window. And if you cannot hear me, you should slide that speaker slider up under the VoIP tray, because we use voice over internet protocol for our audio. And if you'd like to speak to me, right-click and enter a chat message, and I will enable your microphone. I'll probably be so surprised I have forgotten how to do that. Please be careful, speaking of mouse clicks, about clicking your mouse in the NetViewer window, because it does pop up brightly coloured bubbles and things like that. The final thing to say before we get started, speaking about the markets, is that we are starting a new schedule this week because of some of the demands with what we're doing at the moment in Sentient Trader. We aren't going to be holding two different versions of Trader Chats every single week. We are going to be holding a single Trader Chat every Wednesday. We will be doing that Trader Chat at alternating times. So please make sure that you check your emails. We do send you all emails every single week. We will be letting you know what time the Trader Chat for each particular week is going to be, and that is going to be a much more efficient and better way of doing things moving forward. So we are starting that today. Of course, today we're doing it at the regular time at 2 p.m. Right. Well, that's all the housekeeping out of the way. Let's take a look at the markets. Let's just see if those are questions or greetings or I see Tom saying hello. All right. Let's take a look at the market. If you have any questions about Sentient Trader or about Hurst cyclic principles or about anything really, then put that question into the chat window. I will do my best to answer it. I thought that I would, of course, take a look at the American markets, and I thought particularly today we'd just take a look at the Nasdaq, because I think the Nasdaq has some interesting analysis insights, particularly when you compare an analysis of the Nasdaq with an analysis of the S&P 500. I also thought I might throw in a little bit of a discussion about Elliott wave theory. In last week's signals chat, we ended up spending quite a lot of time speaking about Elliott wave theory. I don't want to spend too much time speaking about it. I'm not an expert Elliott wave analyst, and but I thought I would simply mention it and answer a very interesting email that was a question that was emailed to me this week, following and in response to the ST Outlook post that I published on Saturday. So that's my little plan. If you have questions or anything, then pop them into the chat window, or if you have things that you'd like to speak about, then do please let me know. So what I thought I'd start with was taking a look at the Nasdaq, at the analysis of the Nasdaq, and I should say that I'm sort of assuming that most of you have taken which is the market commentary that I've been posting every Saturday. I really enjoy doing it. It's my take on the markets and what's happening in the markets at the moment. And So I'm quite enjoying sort of posting a commentary on the Saturday and then on the Wednesday in Trader Chat, talking about it and expanding on it and answering any questions that might have come out of that ST Outlook. If you haven't taken a look at ST Outlook, then please do go and take a look and let me know what you think about what's happening in the markets. ST Outlook can be found by going to our website and clicking on I think there's a link there saying ST Outlook. Or perhaps you have to click on the community link and then ST Outlook, something like that. But you can find your way to ST Outlook, and it's our market commentary. And I believe that this week we're going to be enabling a feed burner, which sounds terribly complicated, which will enable anything posted to ST Outlook to be emailed to you directly. Which is great and means that you can keep in touch with everything that I think about the markets. Not only everything that I think about the markets, but we have invited some other Hurst analysts to contribute to ST Outlook. So it's not just going to be me anymore banging on about the market. It's going to be other contributions by other Hurst analysts who will be agreeing with some things I say, I'm sure, and disagreeing with others, which will make it really interesting. And so you can pick and choose what you think is happening in the market. Right, so this is a look at the NASDAQ. Now, I am plotting this particular chart. Hurst bars, these green bars, are called Hurst bars, and the reason that they're called Hurst bars is because Hurst sort of proposed using them, and each bar, unlike a candlestick bar, which presents, of course, the open and the close and the high and the low information for every single trading period, Hurst bars present three pieces of information, and if in a little bit you can see it really clearly. The three pieces of information are, of course, the low price of the day or of the trading period, if it's an intraday chart, and the high price of the trading period, and then there's a little crossbar at the median level. Now, the reason for that is because that, of course, all of Hurst's cyclic tools provide us with information about what's happening in terms of the cycles in the market when the median price of a particular bar crosses over that tool. So if I plot my FLDs as I have over here, then what is important is when the median price crosses that level. So I've highlighted now the 80-day FLD. There you can see it, that I call it cyan colored. Some people might call it pale blue. But when the median price crosses over that FLD, that's that pale blue line, then something significant has happened in the market. In this particular case, it provides us with evidence that a trough of the 80-day cycle has formed. Now, I'm going to look at that in detail now, but the reason why Hurst bars are so useful is because you need to know where the median price is, of course. Many people like using candlestick bars because they use candlestick bars for all their other analysis. I often use candlestick bars, but when I'm particularly carefully watching FLDs or VTLs or the cyclic tools that are available to you in Sentient Trader, then I often turn on Hurst bars. I don't have to keep switching over to a median bar display. I just find them useful. Okay, so let's have a look at the longer term analysis. The longer term analysis, as you can see, let me turn off these FLDs, according to this analysis, it defines I need to change the mode of the whiteboard and turn it on. There we go. It defines an 18-month cycle trough over here in August, which is something that well, this is an analysis that I've produced. It's an analysis that I'm following. I don't think that is necessarily absolutely perfectly correct, as most of you will know. The 4th of October trough from last year is very possibly also the trough of the 18-month cycle. But just as a matter of interest, I produced this analysis to see what this analysis might tell us is happening in the market. and I have positioned the 18-month cycle trough over there. You will know from our discussion, I think it was 2 weeks ago, we spoke about these pins, which is a feature of the new version of Sentient Trader, which is going to be released very, very soon. And you can pin troughs onto a particular price trough. So, of course, I've pinned the 18-month cycle trough right over there. And then the 20-week cycle trough, I think, according to this analysis, is in late January, which occurred simultaneously, synchronously with the 20-week trough in the other U.S. markets, I believe. And then there was an 80-day cycle trough over here in the third week of April in the NASDAQ. Of course, you might know that in the S&P 500, that 80-day trough probably occurred in the second week of April, so there's a week's discrepancy there. I'm very interested in the commonality between different markets, which is why I thought I might speak about the NASDAQ today. We often, or mostly, speak about the S&P 500 in these trader chats, and of course there's a great degree of commonality, but in the shorter cycles, and by shorter cycles I mean anything shorter than 18 months, often those cycle troughs will occur a week or two apart. Okay, so then according to this particular analysis, the trough which occurred on the 4th of June is a trough of only 40-day magnitude. Now, you know, the big question that we've been asking over the past few weeks, ever since the 4th of June, in fact, I started speaking about it on, I believe, the Wednesday, the 6th of June. So that was 2 weeks ago. I started speaking about the potential for the trough that had formed 2 days prior, being a trough of the 40-week cycle. I believe the odds are stacking up higher and higher in terms of that trough being a trough of the 40-week cycle. But as you can see in this particular analysis, I have forced Sentient Trader, if you like, to produce an alternative, which is that this trough on the 4th of June was of only 40-day magnitude. In today's trader chat, I thought I would chat a little bit about that and see whether this is still a valid analysis or not. Okay. As a matter of interest, the alternate analysis is the default analysis that Sentient Trader has been performing. There aren't any pinned troughs here, and that analysis tells us that the trough here on the 4th of June was a trough of 40-week magnitude. Okay. Now, in Saturday's ST Outlook, I said that one of the things that we need to watch for in the NASDAQ is how price responds to the 80-day cycle FLD. Because if price rises up to the 80-day cycle FLD, and then that FLD provides resistance, and then price rides down below that FLD, then it will indicate that in fact price is refusing to cross above the 80-day FLD, and therefore the trough on the 4th of June cannot be confirmed as being of any greater magnitude than 40 days, which is of course the alternative analysis that we looked at a moment ago. Yesterday, Sentient Trader user spoke to me and said, oh, well, it looks as though that 80-day cycle FLD is being crossed or has been crossed. And of course, one can only